Want to do something special today, guys. Since we are in December, we just had Christmas holidays. Markets are very, very, very slow. There's nothing really happening right now, so I want to speak about options trading today. So we're gonna do like an options trading masterclass. Now, before we start, very important is that you guys understand I just started to learn about options 2 or 3 months ago. I'm still playing around with it. I'm not yet a professional options trader, but options caught my interest a couple of years ago already because of the hedging possibilities that you can achieve with options, right? So I would, for example, watch a video about Emirates back in the times, a year ago, 2 years ago. And they were saying how Emirates uses options on how to hedge themselves for spikes in fuel prices and kerosene prices. So, for example, they would obviously buy the fuel for the airplanes, but at the same time, they would trade options. If the price goes too high, then they would make a profit, right? Because they are opening a call option, and if the price drops, their option loses money, but they get fuel cheaper, so they still make profit, right? So options caught my interest because they're used in in many sectors of the economy. If it's obviously traders, if it's funds, if it's big companies, they use options to hedge themselves, right? So options give us a very good opportunity to hedge. A other good example, I guess, would be, for example, let's say you're holding a stock, right? Let's say you buy, I don't know, Nvidia, just for example. Okay, let's maybe switch to Coinbase. Let's speak about Coinbase because I have Coinbase open right now. And Coinbase, I think, is a good example, right? So let's say you own, like I do, I own stocks in Coinbase, okay? So I have about 3K right now in Coinbase. And as you can see, since I entered into Coinbase, my stock dropped about 20%, okay? So I'm at 20% in minus right now. What I should have done, could have done, and that's where people use options, is that I could have opened a put option, right? So call is up, put is down. I could have opened a put option where I'm betting that price will go down, right? So then I am hedged. Why? Because I have a stock holding in Coinbase, but I also have a put option, right? I have a put option on Coinbase, and since I would have entered both at the same time, my stock holdings would be in minus right now, 20%, but my option would be in profit right now, right? So I would win either way. It doesn't matter. So that's the sorry guys, that's the philosophy of of options. Does that make sense so far? And I'm gonna go into what an option is, and we're gonna go through a step-by-step basic plan on what an option is, and then we're gonna go into IBKR, into interactive brokers, and check one of my options that is currently 130% in profit that I just opened last week, right? So options are like leveraged stock trading, like highly leveraged stock trading. So they're very, very interesting because even with little volume, you can make a lot of money, right? So that's why it caught my interest. And again, I'm starting to learn it. I'm not a professional yet. I might make some mistakes. So don't take everything literal that I'm saying today, but we are learning together, okay? Because again, guys, the market in general is pretty boring, right? Bitcoin is no volume, nothing is happening. Our trades so far are going very well. Euro CAD is going very well. Euro Swiss franc is going very well. Gold, obviously, we are currently 4,580 pips in profit, 11.24%. So there's also nothing I'm doing right now, okay? Silver obviously is crushing it completely. So silver, since the re-entry, is up 66%. Copper also is doing pretty well. So all of our trades, our investments are doing very well. And that's all good, but there's nothing really to speak about. So I thought it's a good idea to speak about options, okay? So sounds interesting. I never really educated myself about, and I never took a look into it. Yeah, options are really, really interesting. So let's speak about that today. I need to take a sip of water here. Ah, my nose. Okay, so what I did is I just went into ChatGPT to get a little bit of a guideline and a step-by-step plan so we can go through, okay? So I went into ChatGPT and I said, give me like a step-by-step guide on buying a call option, right? Because what I recently did is, last week I opened a call option, a buy, okay? So call is up, put is down. That's the first thing you need to learn about options. Call is up, put is down, okay? Call is up, like a buy. Sell is like put, okay? Put into the market, put down in that sense, and call up, okay? That's the way I remember and I remind myself of it, okay? So I opened a call option on silver last week. So today is 25th of December. So somewhere over here probably. So we are up like 5-6%, okay? Or 10%. But first of all, what is a call option, okay? So a call option gives you the right, not the obligation, to buy a stock at a set price strike before a specific date expiry. You pay a premium. One contract usually controls 100 shares. Your maximum loss is the premium you paid, okay? Oh my God. So call or put option, it doesn't really matter, because at the end of the day, an option gives you the right, not the obligation, to buy a stock at a set price strike before a specific date expires, right? So in option terms, what we're doing especially is we are betting when we trade a call option, obviously. We are trading, we are buying a stock at a commodity like silver at a certain price. Let's say, for example, here in silver, let's just, for example, say I bought at 69.28, okay? And I'm just buying for this price, right? Which is then my premium. So I buy a stock at a set price, strike before a specific date expire, you pay a premium. One contract usually controls 100 shares, so your maximum loss is the premium you pay, okay? So I paid a premium to buy a stock at this price, okay? And now time decays, okay? So in options trading, what you do, and also in futures, is there's a time limit, right? So you're buying an option for, let's say, 30 days, 60 days, 90 days, and whatever the stock is worth in 90 days. So let's say in 90 days, okay, the stock is right now where it is, okay? At 79. I bought at 69, at 79. So when my stock expires, I can sell my stock at the old price, which is 69, but price right now is at 79. Okay, I could sell a little bit cheaper. I could sell either a little bit higher, but I can sell the stock at that price. So basically what it means in simple terms is that I am buying silver at 69, and after 1 week or after 30 days, 60 days, 90 days, whatever I put at expiry date, I need to sell the stock at the given price. And if the price obviously went up, I can sell to the market at 79. So in that sense, where I bought until where I'm selling, I made 14%. Okay, in that sense, just to keep it simple, if that makes sense. Okay, does that so far make sense, guys? I'm just gonna check in a couple of times with you, so I have all of you guys on board. Does that make sense, guys? Okay, easy. So we are looking for a call option in silver. That's what I was doing a week ago, okay? Number one, be mentally ready. You can lose 100% of the premium. Start small. Options are not shortcuts to easy money, okay? So your downside in options trading is always the premium that you pay, okay? So you can lose 100% of the premium. So if I pay for silver the 69, right, that this is my stop loss. I can lose 100% of the 69, which is the premium, $69, because I'm buying silver for 69. So my stop loss is $69 in that, just for example, in that sense, okay? Broker setup. Open a broker account, get options approval, make sure fees are reasonable, and the platform shows the option chain clearly, okay? Now, when you want to trade when you want to trade options, you need a broker that works on options. Not every broker works, right? I'm using IBKR. Interactive Brokers is probably the best broker, in my opinion, you can use for options trading, for stock trading in general. But there's other brokers like I think plus 500, which I never really got. Like plus 500 really confused me. I tried plus 500 back in the times. But yeah, you can choose, but I found IBKR is the best one. And I had a friend that trades at IBKR, so I have used him a little bit to explain me the platform, because it's a little bit complicated and it's very different to what we are used to in CFD trading and stuff like that. But we'll keep it simple, okay? Step number 3, pick the stock. Choose liquidity, well-known stocks, avoid liquidity, penny garbage, and hype-only pumps, okay? So what you want is you want to choose a stock that has a lot of liquidity. That's really important in stock trading, because in stock trading, the liquidity is even more important than everything else, okay? Step number 4, open the option chain, review expiries, strikes, bid, ask, volume, and open interest. Look for tight spreads at liquidity, okay? I'm gonna do this later. Number 5, choose expiry. Prefer 30 to 90 days when learning, okay? So what I always do is mostly I look for 90 days. So I've heard that many times that most people say if you trade options and go for 90 days, you don't want to let it run up to 90 days, but you want to give it some space. You want to close it early and profit, because with time decaying, the profit also decays, but we're going to speak about that in a second, okay? Short-dated options die fast due to time decay, okay? Because you have the theta, which is basically time decay, because there's certain variables that play into options. So you're not just like buying like a stock, you're buying and holding it and selling it for the profit, but there's also time decay, okay? Number 6 is choose strike. Start with at the money, ATM, or slightly in the money, ETM. Out of the money, OTM is cheap but low probability, okay? So when we choose a strike price, that's very important. What is the strike price? The strike price is where we buy, okay? So let's say we would buy into silver right now. Okay, then if we would buy at the money, okay, it would be here. This would be our strike price, okay? Our strike price would be at the money, ATM, which is basically exactly where the price is, okay? In the money would be, let's say, here or here or here or here. Obviously, the lower we go, right, the more we're going to pay in premium, the more expensive it's going to be, because then we already have a little bit of an upside, okay? And then out of the money would be out of the price. So somewhere over here, for example, or here, or just closely above it. So at the money, ATM, ETM in the money, and then OTM out of the money, okay? Is somewhere over here. I hope that makes sense. That's our price that we buy. So strike price is like our entry in CFD trading, okay? What we want to do most of the times is we want to buy a silver position in the money, or like in the money or at the money, okay? So right now that would be our strike price, okay? Check key Greeks. So now we speak about something that many people get confused about, which is the Greeks, right? So Greeks is, for example, theta that we just spoke about, which is time decay, okay? So the Greeks, there's delta, shows sensitivity to price moves. Delta is the most important one, okay? Because delta shows us if we have a delta of 1, okay, and we're gonna go over it in IBKR together and pretend to open another option trade and do this together, okay? But delta shows sensitivity to price moves, okay? So if we have a delta of 1, that means we move 1% as the price moves 1%. If we have a delta of 0.5, it means if price moves by 1%, we only move 0.5%, okay? So what I always did so far is I always looked for the option with the highest delta, because I am simply betting on price increase, not on volume, okay? I still keep it very simple, because you can bet on volume, you can hedge, you can have a buy and a sell position. So it doesn't matter where it goes, as long as you have volume, you're going to be in profit. That's, I think, like more like a connected option, right? It's an option chain where you have a call and a put, and there's also different other ones, right? But I'm not so far yet. So what I mostly do is a naked call, which is basically mean I'm just betting on price going up. And for me, it's important that the delta comes as close as possible to 1%, okay, to 1. Theta shows daily decay, okay? So theta shows us every day passes, what is the decay gonna be? Because the more time passes in the holding of the option, the less it's gonna give us percentual return, right? Implied volatility is EV, shows how expensive options are, okay? So number 8, risk and position size. Decide how much you are okay losing. 1-2% of account per trade is reasonable for most learners, okay? Normal risk management, like in CFD trading, 1 to 3%. place the order. Use buy to open with a limit order. Avoid market orders, wide spreads. Okay, so what you want to mostly do, which I've never done so far, is a limit order. I always go in with buy at market because I buy, for example, like silver, where I know we're going to have an insane increase, so I don't mind the price. I just want to be in. Okay. Number 10, plan before entry. Define profit target, max loss, and time stop. No improvising mid-trade. Okay. 11, manage the trade, watch price, time decay and EV, take partial profits and strong moves, cut losers before they wreck the account. So I already have my silver position in break even, okay? Number 12, exit, sell to close. Don't hold to expiry unless you want the shares and have the capital. So the thing is, after, let's say you hold the option, what is going to happen is that if the time expires, you keep the shares, okay? So if I let the option run for 90 days, let's say somewhere over here, then I'm gonna get the real option and then I can keep it or sell it, right? So for example, if this silver position should go crazy up and I still see more potential of it going up, I might just keep the option, right? And not sell it and then get the stocks or like the commodity itself and then have more of an increase. Because after the time decay, after the time ran out, the expiry date, I get the stock, but I bought the stock at 79 and I can sell it again at 79 at my strike price where I bought initially. That's the whole game about stocks, about options, okay? Number 13, review, track the worked and what track what worked and what didn't. This is how you stop gambling and start trading, okay? So far that's a small guide. Okay, let's go into the IBKR platform. So here you can see my open positions. Okay, I started slow. I deposited $3,000. I'm currently sitting at 4.410. Okay, which is already good. And here you can see my open positions. Okay, again, this is a little bit more sophisticated than CFD trading. It's a little bit more complicated. But what do we have here is my daily P&L, $571. Unrealized P&L in total, $1,028. Net liquidity, 4.4K. Excess liquidity, if I want to open new positions, 2.2K, right? And so on and so on and so on, okay? So here you can see some of my position. And number one position is my option, one position in iShare Silver Trust, right? In iShare Silver Trust, I have one position, okay, which the daily P&L is $564. Daily P&L in percent is 14.68%. Average buy price was 7.51. Cost bias is 751. So my stop loss is 751. That's what I paid for this stock, okay? My market value is 1,764. So 1,764 minus 751, which is my cost, what I paid, right? My profit is $1,013. So in total, 134.8%. And keep in mind, again, I opened this position a week ago, okay? A week ago. Then I have another option on STTK, which is Shetak Labs ENC, one of the stocks that we spoke about last time. I don't know if you guys remember this stock over here, but we spoke about it. Here we spoke about this stock, STTK, right, which we found on here on the insider trading Finviz, okay? And I opened a option trade, 2 option trades on this one, okay? And as you can see, my entry was somewhere over here, so we are finally like getting into profit, right? But this position, STTK, Shetak Labs ENC, I have 21 positions, right? Because it's a very cheap price, and I'm currently up 69.8%, so $29, okay? Then I have another one, and here you can also see when it expires. So here you have a silver call iShare Silver Trust, which is expiring on the 20th of March. This one is just a trade, okay? That's not an option. That's just like I bought the stock. And then here we have a option that is gonna also expire on the 20th of March, which is up 20%. And then we have another one, which is expiring on June 18th, where we are up 6%, okay? And then we just have some normal holdings, which are currently in minus, the Coinbase position we spoke about, okay? But so far, I hope this makes sense, okay? So let's go into the silver position for a second and check this out. So here, you can see we are currently sitting at 17.49. That's the current price. We entered at 7.51, okay? So we doubled it, more than doubled it, okay? you can see I have one contract, market value total is 1764, blah, 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 everything we spoke about. I have a sell stop, a stop loss basically set at break even. And here, when you enter a option, it's always going to show you your stop loss, your max loss, which currently is 1,780. That's my whole position, right? But I already have a break even in. So you can see I have a sell stop at 8, okay? And then you can see max return is unlimited, okay? And here you have the P&L, so it shows you when you're break even, obviously you're at 0, and then if price increases, where you're gonna go, okay? And then we have the Greeks, which probably are shown here. You can see delta is at 85, so 0.85, which comes close to 1%. So every time silver iShares Silver Trust moves 1%, I move 0.85% with it, okay? And then you have theta and you have gamma, okay? Which again, theta is the time decay. Gamma is not so important right now, okay? But let's say we want to open a position, okay? Let's say let's do 2 positions here. One of them is going to be the silver position, another one, suspecting we open another one, a buy, so a call, and then we are going to suspect and give an example of a call, so I sell on Coinbase, right? Because as you can see, even now it would still make a lot of sense to open a sell position in Coinbase to hedge myself. Why? Because you can see we are in a bearish sequence. We still have about 30% to go, right? And I have buy positions, right? I have about 3 to 4K open buy positions, like stocks holding in Coinbase. And I'm making minus right now, right? I'm already 20% in minus, okay? So it would make sense to open this Coinbase, and we're gonna do it together. So the first thing we wanna do is we wanna look for what we are buying, okay? So here on the watch list, I already have the silver, okay? So I'm just gonna open the silver trust. And then once it opens, we have the chart here, we have the option chain, option wizard, option analysis, and news, fundamentals, and so on. So what I mostly use is a option wizard, which is like a dummied down version to open an option. It's simpler. Option chain is a little bit more complicated because here you can build certain options systems. So you can have a buy, you can have a sell, you can have a whatever, you can build something crazy, okay? But if I go on option chain, for example, or option wizard, you choose. At the end of the day, I started with option wizard. Now I'm using more the option chain. But option wizard is more like, okay, I have to choose SLV price will go up or SLV price will go down, okay? Then I can choose price will stay within, price will move at least, volatility will go up, volatility will go down. So in options, I can bet on price will stay within, price will move at least, volatility will go up, or volatility will go down. So option trading is also pretty sick because it's not like CFDs where price needs to go up or down. We need to make plus pips or minus pips. Plus pips if we are buying, minus pips if we are selling, right? We can also just bet on volatility. But for volatility options, we need to have a call and a put option, right? So there needs to be something like a security, like we need to buy and sell. So when volatility comes into the buy side, it offsets our sell and it makes more profit on the buy, and vice versa, if that makes sense. Okay, but we'll keep it simple for now. Let's not go into these complicated option chains. Let's just go into, we want to buy silver, because we think silver will continue to go up. And I think I've spoken enough over the last couple of months about silver. And we want to sell Coinbase because I think Coinbase price will decrease. But now we will say SVL price will go up, okay? Find strategy. So now I need to select the date. By which date do you expect the price of SLV to meet your forecast? So we want to do always at least 90 days. So we have here a March 31st, 2026, which is in 93 days. So we're gonna always take around 90 days. And then I think price of silver will go up by, now I need to put in how much percent, okay? Now what I like to do is I like to take the NXT system and just see, for example, now we still have another 10% to hit C target, okay? Now we're already very close to C target, but I pretty much think we're gonna overextend just because of the insane stability we have in silver, okay? So at least at least what I want to do is I want to at least bet C target, which is 10%. So what I'm going to do here is I'm going to put in 10%. Okay? Makes sense? Okay, easy. I hope for the other ones also. So again, we say at least 10%, okay? So the same thing for Coinbase would be, we would say, okay, in the next 90 days, at least 34%, okay? But then I go into find strategy, okay? Now what it's gonna do with the two dates or with the two parameters that I gave, 93 days expiry date, 10% increase in price, it's gonna give me certain positions, okay? Now you have 8 results and it's gonna show you different descriptions: short put, bull call, bull put, risk reversal, okay? So there's different things we can do right now, okay? Here's the action: sell, buy. So we're gonna look more for the buy side, not the sell side, okay? Then we have the aggression, medium, high, low, unknown, whatever, max profit and max loss, okay? We have the bid and the ask, okay? So that's what people are asking for, that's where people are selling for, okay? So first thing we want to do is we want to stick to the buy side and we want to look for something with a defined low stop loss, because this account currently holds $4,000, right? So we want to look more towards the downside and choose something that has a very low downside. So you can see we have one trade here that has a stop loss of 272, 260. Here's another one with 22,000 that we cannot buy, obviously, 600, 5,000, blah, blah, blah. So we want to go with one of these ones, and both of them. So this one, I'm risking $260 to make $482 max profit. And here I have one with 272 and max profit of 470. And then here the bigger ones are unlimited. You can see here I'm risking $22,000, but I have unlimited potential in profit, okay? So we want to find most of the time something that has a low downside and unlimited profit, but we don't have that right now. So here's a 1-to-1 risk to reward. We are a little bit in a negative, so I'm risking 602 to make 500, makes no sense. So this one is a 1-to-2. I'm risking 260 to make 500 basically. So this one sounds smart. So I'm going to choose this one. It's a bull call, which I want. I'm bullish, so I'm calling silver. So let's click on it. Once I click on it, since it's Sunday, it's not going to give me the market price. But again, we are just playing around. I need to choose how much quantity, and you have to at least always buy one share. You cannot go below one share. One share would be around $70. Yeah, I think so. Let me see if I can find some data, but there's nothing really. Okay, around $70. Okay, so now, yeah, 74. So we are probably around $70. Okay. So again, here the option wizard makes it very easy. Many things are missing, like at the money, in the money. This is not shown. This is only shown in the option chain, but we're gonna do both. Okay. Again, we start with the easy way. So now what I want to do is I want to choose limit, market, or stop. So most of the times they tell us we should use a limit order, okay, to get a good price. But I am very confident that in silver we're going to do the 10% in the next couple of days, pretty sure, and there's not going to be a pullback, okay? This Friday, so 2 days ago, we had one of the biggest inflows in silver ever, okay? So what I'm going to do, hey, what happened here? Okay, so what I'm going to do is I'm going to go to market, and here time and force, I'm going to do good till canceled, okay? Day means if the position does not open in one day, it's going to get canceled, right? And it's today Sunday, so it makes no sense. I'm going to do good until canceled, which means it's going to open the position until I cancel it, right? So I have no time limit for the position opening, which is more important on limit orders, but especially now it's Sunday, okay? And what I'm going to do is I'm going to go into the performance profile. And the performance profile will show us right now that the break-even price sits at 74.13, max loss is $260, and max return is 482. So now when I go into the P&L, you can also just move this bar and see what happens at the given price. So if we go to 75, I'm gonna be $29 in profit. If we go to 90 something close to 100, I'm gonna be 210 in profit, okay? If we go into minus, you can see if we go to 66, I'm losing $76, and then the highest I can lose is the $260, okay, which is basically $242 plus some fees, okay? Then we gotta speak about the Greeks. So delta, delta, you can see is pretty much at 0.5. Okay, or at 50. So it means for each percent, we're gonna move 0.5. The highest it gets around our break-even price, 75, it goes to 0.12. Oh, sorry, I was wrong. I was mixing it up. You can see the delta is very, very low, okay? You can see here the delta, the highest is 0.12, okay? So here you have the price, okay? Here, up here, okay? You have the price and the delta. The delta is very, very low, okay? It's very low risk. So now what we will do is click on submit order, and then it would open here. I'm doing a buy SLV combo. I'm doing a March 31st 7-1 call, and then I have a March 31 26 call, which actually is something I don't want it to do. Why is it giving me a combo? I don't want to do a combo. But you see, now I'm having a combo, which basically means I have a buy and a sell, okay? Because it's good because it secures me to the downside and the upside. But the thing is, I didn't want to do that because you can see I'm buying and I'm selling. I'm buying in the money and I'm selling out of the money, right? Just to protect myself into both sides. That's why the profit and the loss is limited, okay? I know exactly what my max profit is because of my buy position, and I know what exactly my sell position is, my sell downside, because I have a sell position, right? Because here you can see it's a bull call. So I am bullish and I have a call, but it's a combo, but I actually don't want that. That's why I actually prefer the option chain, because it's gonna give me a clean call, just up, okay? Because here it's gonna give you bull put, bull call, risk reversal. So risk reversal, for example, this one here, is one buy and one sell, also like more like a combo, okay? So if I would click here on buy, markets, it's a buy and a sell. So again, it's a buy SLV combo, okay? But I actually don't want to do that. So sometimes you won't find clean buys here in the option wizard, okay? But it's still good. It's a still good position because it's saving you to the downside and towards the upside. So if you are starting with options, this here actually makes sense, okay? But what we want to do, and now we're going to use the option chain, is we want a naked call. We want just a bull call. We just want to go up, okay? So on the option wizard, now it's a little bit more complicated. What we first need to do is choose the date again. What we want to do is 93 days, which is March 31st, 2026. Now it's going to give us the strike price, okay? You can see here strikes, you can see the delta, and you can see puts and calls, okay? So puts are sells, calls are buys. We want to be on the call side because we are deciding for price to go up in the next 93 days. And then we want to look for the delta, which has the highest delta, okay? And you can see the highest delta is this one here, okay? Which is a call option with 0.6 delta. And it's at 69.5. Implied volatility is 63%. The more we go into 100%, the better. Okay. No, that's the price of it. I think the higher the volatility, the more you're going to pay. The less the volatility, the less you're going to pay. So we are at 63. We want to enter at around 40 to 50%, if I remind myself correctly. Right. And buying above like 70, 80, 90, 100% makes no sense because it's too expensive, okay? So we can ask ChatGPT for that, just so I'm not telling you guys any BS, but if I recall, that was the idea. What would be the best EV for a call option on silver? Okay, let's see. And I think, again, below 50% is good. Above 50% is already pretty expensive. Implied volatility. For call buyers, lower EV is usually better, as long as you expect big move. For call sellers, high EV is usually better. So if we want to buy, EV should be low. If we want to sell, EV should be high. Okay. And I think, again, the ideal would be 40. So people often ask, so what number, like 20, 30, 40? That's the trap silver option, sometimes around 18 to 25% EV and sometimes below, up to 40, 60 range during panic. I fix target meaningless, what it matters. What would be a general rule? So I think the general rule was 40% for buy. Buy calls when EV percentile is low, under 30%. Avoid or use spreads with EV percentile high, over 50 and 60%. So this one would not be very smart because we are paying a lot of fees. But again, I'm very sure silver is going to go up. So I'm okay with paying the 69%, okay? Which we even have higher ones if you see here. So the 69 one with the highest delta is the best. So we're going to click on this one. And then you can see it's only a call, okay? And now you will see something interesting. Look at here the performance profile, guys. Do you see the performance profile? So the performance profile tells us 995 is the max loss, but we have unlimited return. I like that. Okay. So what I want to do is I want to click on buy order, market, good till canceled. And you can see I will pay 987. Okay. And that's also my stop loss. That's what I'm losing. I'm buying this option, one option quantity, one share for 987. Okay. And now if we simulate here the P&L, you can see our break even sits at 79.56. Okay. So let's say we go to 80, we're going to be 597 in profit. Let's say we go to 192, we are $1,300 in profit, and so on. Okay. Delta 79. So you can see delta is 0.61 and goes up to 8.4. So delta is going to increase, which is good. Theta is time decay. Okay, you can see time decay hits pretty hard around our break-even price, which is okay. So in my opinion, that sounds like a really good trade. On the right down corner, we only see your camera. Ah, yeah, fuck, true. Do you see it now? The performance profile? I forgot about the camera too. But now you should see it. I can see it here in the chat. Now it's good. Okay, again. Here the delta, the P&L shows us where we would go and how much P&L we would make. Okay. And then the delta shows us at which price given how much we're going to move with it. So you can see at break even, we start at 0.57, 6, 0.7, the highest 0.78, 9, 8.1, 8.3, 8.4. Okay, just increases, which is good because price increases, our delta increases. Again, delta shows us how much are we going to move with the asset. So if the asset moves by 1%, we're going to move by 0.85%. Okay, so we want to keep a high delta. So this, in my opinion, is a very good option. So what I'm going to do is I'm actually going to buy it. Okay. And you can sell the option at any given time before the expiry. Yes, I can sell whenever. I can put a stop loss. It's like normal trading. Okay. So what I'm going to do is I'm going to click on submit buy order. And your order is not accepted, minimum of $2,000. So my margin is not enough, unfortunately, to open this position. Okay. But if I could, I would open it because it's a pretty smart trade in my opinion. But at the same time, your order does not accept the minimum of 2000 USD or equivalent in other currencies required in order to purchase a margin, sell short, trade currency or future. The thing is that I have enough liquidity. I should have enough. Equity with loans current 2.3. Post trade. Post trade. After the trade, I'm gonna have 1,265. Initial market 68. Initial margin 68. Change. Maintenance margin. Position. Yeah, I have enough. I have enough. Not letting me. I don't know. Makes no sense to me, but it is what it is. I cannot open it. I need to put more money into IBKR. Because again, I'm just playing around and learning it myself, okay? But did this make sense so far, guys? And it took me many months to get to this point. It's really complicated. Okay, easy. So let's do the Coinbase one, okay? We have 15 minutes left. Let's do Coinbase. So again, we want to go into Coinbase. We want to go into the option chain. And now this time we don't want to have a call, we want to have a put, we want to sell. We want to protect ourselves to the downside, okay? So what I'm going to do again is 90 days from now. So we have one here at 82 days and 110 days. So I'm going to take the 82 days. And 82 days, the EV is very high, which is good because we want to sell. Right? So now, if I understood correctly, IBKR is not only for derivatives, but also for spot invest. Yeah, so in IBKR, you can do everything. You can do everything in IBKR. It's one of the biggest brokers. You can buy stocks, you can trade options, you can trade Forex, you can trade futures, you can... everything you want. You can bet, you can do everything. Okay? I have some stocks that I bought just to play around. Nothing that I'm intending to, you know, crazy. Again, that's also why I just put $4,000 just to play around and learn all of this, because you don't want to learn with too much money. But it's going pretty well. So soon I'm gonna increase my volume on IBKR because I like options trading. It's pretty sick. So now we want to sell a a put. Sorry guys. We want to open the put on Coinbase, 82 days. We want to look for good delta. So here we have the highest delta, which is minus 0.69%. So yeah, 0.69%. So that means each percent we go down in Coinbase, we're going to go with it by steps of 0.69. Okay. So we're going to take this one. And here you can see this one would be a sell order. Sell one contract of CoinMarch 280 put. Okay. Which obviously I cannot open because it's too expensive. But you can see here, our max loss would be 22K. Max return would be 5K. So this trade makes no sense. Okay. I mean, we're risking 22K to make 5K. Makes zero sense. Okay. Okay, that's because we were on a sell order. What we want to buy, okay? So that makes sense, okay? So buy order, you can see max loss would be 5K, max return would be 22K, okay? So we said Coinbase is going to 155. So here it only goes until 165. If we would go to 165, we would make 6K. Okay, and then it continues. But if we obviously go higher, we would lose a lot of money. But I cannot open this option. It's too much money, too high, right? We can only look for cheaper ones. So let's look at this one. Oh, sorry, I have to go into ask line, right? This one, max loss 4.6K, max return 22K. That sounds pretty good. But also here, I will not be able to open it. Submit order. Okay. $3.9K. Market, good till cancelled. Too little money. Let's see if we find one, a cheap one. 3,000. Also not. This one is at 26. 2.6K loss. Market, submit buy order, also exceeds our level. Let's look at this one. 2K, 20K. Your order is not accepted. In order to obtain the desired position, your equity loan value 204 must exceed the initial margin 263. So I have a little too little margin on. Let's see if one of the better ones here we can get, because I definitely want to get into this position. It's not going to let me because of the 2,000 initial margin. So I need to put some money on tomorrow and then we can trade this, because I'm definitely going to open this sell position. I need in general 2,000 USD equivalent in other currencies required in order to open it. But these are good trades, as you can see. Like, look at the performance. We have a max loss of 935. Why am I freezing? We have a performance profile with a max loss of 935 to $18,000 profit. Guys, I mean, how does that make like, there's no reason to not enter this position, right? If we know with the NXT system, and that's so important, and that's why the NXT system is, in my opinion, even better than in Forex trading for options, okay? Because it tells us where the market will go. If we go to the price of 165 only, so we are currently at 237, 165 is here, right? Before our C target. Then we would be making 3K. Okay. Which just makes sense. So I'm definitely going to open a a put position on Coinbase. I just need to put the $2,000 margin on the account on Monday. And then I'm going to open this position. And then I'm going to update you guys. But yeah, I guess, guys, that's it. What else can we speak about here? Any questions so far, guys? We still have 10 minutes, but I'm not gonna add anything else. But we came very far for not even 1 hour so far. I mean, to understand this, it took me like, I don't know how many weeks. Oy. Every time I was flying around the world, I was watching videos about options. But in that sense, it makes a lot of sense with this Coinbase position because I'm already in minus with my positions. I'm not going to sell them. I'm going to keep them long term. But to make some money on the downside, it makes sense to open a position. Looks interesting. Maybe I will also open a little account and play around. Yeah, it's a lot of fun. It's a lot of fun. And options have a lot of potential, you know. Especially, again, we are very good. We are very well. We are very well. Like we have a good tool, let's say it like that. We have a good tool with the NXT system to win good in options, because with the NXT system we know very well where market is going with a very high percentage. Now we just need to be patient, give it a little time, and yeah. This one also has the highest delta, that's why it's so expensive and a very high EV. If we here go to 165, we would make 6K. Very interesting. Thanks for the insights. Sure. Again, very basic level so far. It's far from expert or anything. It's still beginner, okay? But as you can see, it's enough to make money. Especially if you go back into the silver position here, where I am up 134% in 1 week and I have $1,000 unrealized gain on a 3K account. Like, it's crazy, guys. Okay. Easy, guys. I guess with that being said, was something a little bit different this time. But again, normal market, pretty boring. So I thought it would be good for you guys to learn something new too. It is also good for me because at the same time I'm, running through the process with you guys and teaching you, which when I teach, I also learn myself more. I hope it was understandable. I hope it was exciting for you guys. Again, it took me a long time to understand just these basics. It's a completely new concept, completely different than, let's say, CFD trading or crypto trading or whatever. But it's very, very interesting. It's very potential. It's very good to hedge. And I need to start to think more of hedges, right? Especially with my capital. I can just not be only long Bitcoin and only, just for example, only long whatever and then not hedge myself to the downside. Why not hedge yourself, and make money on both sides? I think that's really the big gameplay here, and also for building key wealth, right? So that's why at any point for some of you guys, you will have to look into options anyways. Now you did it a little bit earlier maybe, and still also with low money, there's good potential. You need at least 2K on IBKR to open option positions in free money, as you just saw. So 2K is also not too much, and then you can start with the smaller options, maybe not like Apple or whatever, because their shares are very expensive and you always need to have at least one share. But yeah, I see you guys on the next session. Enjoy the rest of Christmas and New Year's, and we won't see us until New Year, right? It's already the 28th. Crazy how fast time goes. So we will see us on the 4th of January, guys. I wish you a happy New Year. Take care of yourself, and we see us in the next one. Ciao, ciao.